8 years ago, almost to the exact day, Bitcoin nearly ceased to exist. At least that's what the market believed. Now, there were two primary scares at the time. And through this period, March 2017, the market dropped 32.5%. Currently, Bitcoin is facing a similar drawdown from the high of January down to March, this time dead on 30%. And of course, this period's taken a lot longer, but of course the market has also matured since that time. So what happened back then and what transpired after that period, that's what we're looking at in today's video, along with other macro data points, macro analysis. So if you love the sound of that, like, subscribe to the channel to home a macro cycle analysis. We're covering Bitcoin primarily today, but also looking at macro cycles and how these tools are used on the traditional markets ranging back over 100 years and seeing how the same thing happens time and time again when the bull market is in doubt. All right, let's dive in. Let's start with Bitcoin back in 2017. So March 2017, 32.5% down. Now, there were two big scares at the time. The first was China banning Bitcoin. And then, of course, that led into China banning Bitcoin mining. I think everyone may have heard about that history by now. That goes back over 8 years. The other, through this period in 2017, was the money printer, the Bitcoin money printer. Nearly 2 billion has been wiped off Bitcoin's value in the 3 days, all because of a fork, March 17, 2017. So at the time, Bitcoin was going through all sorts of forks. Basically, that just means that they were taking the code of Bitcoin and forking it to another Bitcoin. And at the time, it was a little bit fearful. It was very fearful, similar to what we're seeing at the moment. This isn't the only thing I'm talking about in today's video. I'm looking at very big technical points for the long-term scale as well. So there are quite a few things here that have happened each time where the market is in doubt. Of course, I must also talk about the invalidation levels, because at the end of the day, no one has the answers to the market. We're just looking at probabilities here. That's a little not financial advice to keep my ass safe here, but I'm essentially looking at what the market has provided us over its history, its Bitcoin history, and the traditional markets, and seeing whether this continues to follow similar patterns. So during the period of March, there was a lot of fear. Now, it didn't last all that long, but it did take a few months for Bitcoin to finally and successfully break out of the all-time high, or the old all-time high back in November of 2013. You see January hit it, February hit it, March hit it, and then finally April hit it. And well, you can see the bars were basically massive from that point. And so once people started to figure out, once investors started to figure out that the fork was potentially a bit of a free money printer, that led Bitcoin to a super surge. And how does that happen? Well, essentially, if you were holding Bitcoin when this fork happened, the amount of Bitcoin you had meant you would get this same token to not necessarily the same value of what Bitcoin was, but the same number. So if you had 10 Bitcoin at the time, and at the time it was $1,000, well, then you would get 10 of this other coin. Now, you might remember some of these coins, you might not. One in particular was Bitcoin Cash, or as the beloved name goes, Bcash. You can put the memes down below for that, but there was also Bitcoin Satoshi Vision as well, Bitcoin Unlimited, Bitcoin Gold, Bitcoin Diamond, Bitcoin Black, and that was basically the flavor of the cycle, along with ICOs. And so when Bitcoin continued to get forked after forked after forked, the price kept going up. We kept skyrocketing from this point. Same thing happened to Ethereum in that cycle. So that's essentially the first thing. I'll get the narratives and that sort of thing out of the way first up before we get into some of the technical data here. We've seen many of these sorts of events where the fear comes out and Bitcoin finds support at a key level. So that leads me to the main thing I want to discuss here, and that is our 50% level. So let's revisit the 50% of Bitcoin and what happens along the journey of the bull market, in particular once Bitcoin breaks out of the old all-time high. Now, if you enjoy this sort of content, make sure you subscribe to the free Crypto and Economic Report. You'll also get a link to our free Discord where we do updates, and you can see TIA reviews and trading results from members. That link is in the top of the video description. name, email address, and you'll receive that once a week, our free report there with more on the markets. Okay, so back to Bitcoin before I get into some of the data here. We're looking at the 50% level used really, really simply here. This is the extension tool. So right on the side, your fib retracement, the extension I use for profit targets and getting in and out of positions, so entries. But this one here, fib retracement, really simple, just having the 100%, so the top, the bottom, and the 50% through the middle. Now, of course, 50% isn't a Fibonacci number, but that's where you find it. That's the tool there. So how I'm using it is the swing highs to the swing lows, turning on my swing pro indicator here, but really looking for significant swings. And in this case, Bitcoin's monthly is a pretty good example of that. We can go across and look at the 50% on the monthly swings here, and generally they can touch this level, they can break through it on a monthly chart, they can break through it generally. And the percentage I saw was over 90%, almost 100%, I think, in the case of Bitcoin. But I'll show you some other data points when it comes to the traditional markets, because obviously they've had over 100 years, so there's obviously way more data points. But here we are, 95, 100% of the time, Bitcoin won't close on a monthly basis underneath that 50% level if it is still in a bull market. So that's what I'm looking at when we're talking about the market being in doubt, the bull market being in doubt, and the doubters come out, and essentially you get the whole psychology of a market cycle happening in a shorter term time frame, where we've seen the euphoric blow off tops in the short term, potentially long term, but I'll stick to the short term here. With the Trump inauguration and the meme coins, and then the complacency, Trump's got the strategic reserve, and then bam, we get capitulation, or we just get a bit of a dump into some denial, panic, and we notice the anger come out, the depression, and things cycle over again. This happens in the short time frames, the medium time frames, and the long time frames. So back to the 50% levels, looking at how this plays out in each of the cycles. That is the first point, June. Then we get to March, big drawdown. You can even look at it in January. It was a pretty significant turning point there where it touched the all-time high. March didn't even get close to the 50% level, and we keep drawing this all the way up. Here was the first significant correction after Bitcoin broke out of the all-time high. And I remember this quite vividly as I was trading it through here, and I also thought that the market was over. You got these pretty big dumps, but then once you see the reversals, you think, well, I've got to get back on with the trend, and that's what happens sometimes. The market typically does just enough to fool the majority of the people at the extremes, whether it's the peak or the low. And so that's just what happens as traders. No one gets everything right 100%. Looking at the correction here, barely got to, well, it had a few bucks off the 50% level, and then found strength, higher monthly close, and then another breakout. Okay, so we can draw the tool up to the next level. This is another significant correction here. The price didn't get to the 50%, so it remained above it. The monthly close remained above it. November 2017, pretty massive month, and that leads us to the final top in December. Huge blow off top here, very low close. So some signs are starting to show up there, but just keeping it simple to the tool and how things happen time and time again. You can see the pullback after that point. January tested the 50%, closed above it. February broke underneath, closed above it. And then March happened, big close below. By that stage, a lot of people, some got the point that the cycle was over, but at the time you end up with this complacency. And that's why I bring up this chart here. You get a big dump down and the complacency bounce happens, and you think, oh, things might still be back on. But the sign of the market, in this case Bitcoin, closing under the 50%, even though there was a rally to retest the underside of the 50%, was a very good sign that things were most likely over. Gave you a bit of a extra selling point here to get out, and then the whole story, well, the whole thing's history from that point, a big collapse from there. So moving forward from that, let's see what's happened in the previous cycle. So this is the 2021 cycle. We had the movement up from the low in 2018, at the top in 2019. We still hadn't broken through to a new all-time high. Therefore, the price tends to retrace a lot further than once it breaks out of the all-time high. In this case, it went underneath the 50%, above. COVID happened, and then straight after COVID, big close above the 50%. Remember, this was like one of the most fearful times in the entire planet, in all fields, whether it was finances, whether it was, I don't know, everyday work life, everyday health life. It was just the biggest scare in the world that we'd seen in our lifetimes. And the following month, the market, Bitcoin, closed above this 50% level. Okay, the thing moved up, everything keeps going. We see another correction here, but really didn't break the June 2019 top, and we just keep tracking up towards the next high. There were a few corrections along the way into the April top. There was the pullback in January and February, and then April, and here comes May. Huge, big move to the downside. Now, June didn't close underneath it. July didn't close underneath it, but again, I remember this pretty vividly, and it was bordering the end of the game. We had multiple daily closes under this level. We had a weekly close under this level, but fortunately, the monthly didn't close under this price point. We know from history now that this next rally was essentially weak overall. Yes, altcoins did pop off, but when we look back on it, it was more so a weaker rally. So we take it up to the top. This is the entire cycle, came right back down, tested it, closed above it. If you want to have a look at it on your beautiful coloring crayons here, your candles, well, then you've got the bounce above it. Again, it held above it. So essentially, look at it like your bull market support. So again, 50% level bull market support. And after that point, it broke down in May of 2022. And so you had the complacency bounce here and then the breakdown from there. Now, if you wanted to get a little bit closer to the action, you can obviously use the 50% levels on the swings to the downside. You can see how it didn't make it back above $51,000, a bit of a complacency bounce here, and then it all failed from that point. And really, it is a longer way into the end of things to know whether it's going to end or the game's still on. But we're just looking at one signal here to give the almost definitive answer that the game is over. And so in this case, that tells you the game is over. There are signs earlier on, but that says it's under 50%. Most likely that you're just wasting your time at this point to try and buy any further dips until there is a sign of a low. Okay, one more question I'll answer here is why is this under the 50% now? I thought you said it closed above the 50%. Well, that's because you don't have all of this history when this part shows up. This is your reference point. Yep, it closed above 50%, and then the market keeps going. So it's essentially like your moving averages. They'll keep moving along the way, and eventually it'll change. Okay, so that's where it was for the last cycle. Now it takes us to this cycle. So we do the same thing again. The low, November, we had the March correction. So here was February into March. It touched the 50%. So that happened early in the month and then closed way above it. Okay, so then we have our next reference point, didn't get to the 50% at 23,000. I remember this period quite specifically as well. There was a lot of calls for 10, 9, 12, $3,000 BTC from a lot of traders out there. Didn't happen, and then explosion happened from that point. Then we get to the January ETF, didn't get back to the 50%. Then we get to the March 2024, 44K was basically the line in the sand here, and we looked at 50% that were closer to the action. So just bringing that time frame down a little bit here. Touched almost to the dollar at the 50%, couple $100 off, $150 off here. August bounced, and that leads us to our current all-time high. So we'll look at the last 6-7 months worth of price action here, and the 50% level has now been tested twice. You've got the February bar and the March bar, and it's attempting to close out the month. We've got 20 more days, plenty of time to go, but hopefully it can close out here. Otherwise, the saving grace, the final nail in the coffin, if you could say that, $62,000. So we're not anywhere close to that. Now, of course, there'd be other signals on the way down, plenty of other weakness that we've seen through the highs. And so if it's unable to continue to hold this level, then you'd have to expect that that's it. The game's over. Now, that's the modern history of Bitcoin holding above the 50% level. But there are 2 times early in its history where it didn't hold above the 50% level within a bull market cycle. However, my argument, and you're happy to have your own arguments if you want, my argument is that the liquidity was extremely, extremely low, Obviously known a lot less traders in the game, and a lot less money in the game, obviously being the liquidity. So the first move up here ran to $32 and dumped to $2. It failed on the monthly close at the 50% level, which I guess could have been a signal to say we're probably going to see big downside here. You can see it just got to $16.15, the 50% at $15.95, and it failed the next month in July, closed lower, and then dumped pretty hard, using that same low for the 2010 to 2013 cycle, which is the cycle, the way that I look at the cycle. Everyone's welcome to their own ways. But the next movement up to $270 failed again at the 50% level. You can see it ran right up. Now we have a top. The closing price came right back down after such a massive, massive pump and closed close to that 50%, just above it. Following month, failed again, and then you had a pretty significant correction from that point. The top to the low again was about 76%. And then we have that final blow off top to $1,200-ish. The market tested it, held, tested, and closed below it in February 2014, and that was basically game over. A month or two above, back underneath, so complacency bounce back on this chart here. We need to cool off, ready for the next rally, and obviously the rest is history from there. When there's so much noise in trading, investing, finance, education, you're hearing all sorts of headlines, topics, narratives, reasons why something should do this or that. I find it really refreshing to come back to one simple tool if I am unsure about everything, doubting the market, doubting the next move. Like I said, the fear, uncertainty, doubt that creeps in. Coming back to one thing and then building upon it, I find it probably the easiest way to tackle trading and investing, because there's just so much noise out there in order to make a decision in the market. Like, subscribe to the channel if you want to see more of this. I still have 2 more reasons to go around the Bitcoin bull market in doubt, and here's what comes next, or at least in terms of the probabilities for the way we can look at it. But before I get to those 2, or the next one, looking at the quarterlies and the numbers of red, just want to show you a quick look here on the Dow Jones going back to 1897. Tons and tons of data here, looking at the 50% levels. And this one I think is going to help a lot when it comes to the end of the cycle crash. The big crash once we reach post 2026. Maybe the stock market keeps going up into 2027. But what I'm talking about is once that top is confirmed, what that crash may look like. And throughout history, everything after 1929, so basically after the Roaring '20s, the Great Depression, the huge dump, massive dump from 386, that was an 89% dump. The stock market really has not gone through anything like that for many reasons. I think the biggest reason that has been accounted for the reasons why the market doesn't dump like it did in 1929 through to the 30s is because of the money printer getting off the gold standard and those sort of things, where you're basically floating it and just printing as much as necessary for the recovery of the market. Now, of course, sometimes it works, sometimes it doesn't. It works pretty often, and then eventually when the cycle turns down, it's not going to work as well until there are some fundamental changes in how our economy is running at that time. And something new generally comes along, some sort of new technology each of those periods. But I digress. That goes down in the history around cycles themselves. What I'm looking at here is the 50% level, running from the 1932 low to the 1973 top, but we could do it almost the whole way up, barring the Second World War, which obviously started in 1939 through to 1945. You can see it came back, tested the 50%, under, back above, and then obviously we can just keep going with history here, but it was still underneath the previous old all-time high. Like we saw with Bitcoin, you still see significant corrections. Now, running this up, you can see quickly with your eye that there were no times that it came back to the 50% level, but except 1973 down to the low of 1975. Pretty damn close there for the entire range. And I'm just going to keep running this up. You've got 1987, the Black Swan event there, the Black Monday, huge correction. Now, if I'm using cycle to cycle lows, it comes out even more accurate, but I'll let you go away and do that yourself. Look at that, touches 50%, bounces back above, but the end of the cycle for the stock market was around 1990 because that's when the recession happened. There wasn't a recession here, the recession came in the 90s. So even a more shallow correction, most likely because there was already a huge flush out event. When you get the flush out events, generally you don't see as big of a correction. Now, from the 1970s, we can keep running this tool all the way up. We get to the dot-com bust. Didn't get to the 50%. This is on the Dow Jones because we're using over 120 years of data. And then we get to the peak of 2007, major collapse. I'm on a monthly chart here, and there was a 1 month close below, 1 month close back above, big spring out, and that was the low for the market. So it basically corrected to the 50% level and back above. Now, if I wanted to get a little bit fancy, go back to the 1932 low, well, you're basically almost dead on the money there. Look at the close and then back above. So pretty accurate over 120 odd years. And this is for the end of those cycle corrections. I'll get to what I'm talking about in just a moment. Let's look at the next one. There is your COVID top to COVID correction. I think most people would agree these are pretty significant events in the world, right? And it still has held up very well. So let's go to the low of the cycle, the GFC low, to the pre-pandemic top, the correction, almost dead on 50% to those next, also finding support. That was the 2016 election, the resistance of 2015, and then the corrections, okay? So some pretty interesting levels there. What does that mean moving forward? Well, we got to get a top in first. That's the big play here. And then from that top point, we can look down towards some sort of 50% level. Maybe it's 50, maybe it's 52,000 we reach. Look down at 50% level. That's huge, 29,000 points. We'll see. But this could even go higher. This could go much higher. We don't know yet. We just don't know. The thing I want to look at here is the correction. And the percentage move is generally around that sort of 40, 50, sometimes 60% at the end of the cycle. So there's the GFC, 53, 54%. Now, the big one here, when things start to turn down, the end of the cycle, you'll hear a lot of calls about why the stock market is so similar to 1929 into 1930. We're going to see the same sort of thing. We're going to see a 90% correction on stocks. And like you can see over history, almost 100 years, well, 120 years, it's only happened once that we got something like that. So the probabilities really aren't on the side of some sort of correction like that. The probabilities are far more on the side of something in the vicinity of 40 to 60%. And that's not to breed any sort of fear, uncertainty, doubt, nothing like that. It's just looking at the probabilities of the past, and they don't happen very often at all. Even the COVID dump, high to low, 38%. So just short of the 40% there, quick move out of it. So that's a bit of a mini lesson on the side, looking at this 50% rule and why I'm using it on Bitcoin with that history and how well it's worked with BTC and the Dow Jones, how much emphasis I put on it. Now, the final thing that has happened time and time again throughout Bitcoin bull markets are the number of red quarters within a bull market. Very simply, looking at the number of red quarters. So far, we've got 2 confirmed red quarters. This quarter, which is March, has 19, call it 20 days to go until this quarter is over. The closing price of quarter 4 of 2024, $93,402. So if we go $93,403, or even a cent over, but let's call it $3, then this will be a green quarterly close. It almost seems unlikely at this point, but obviously anything can happen in the next 20 days. But if it does close red, then that's not the end of the world. And the reason why I went through the 50% level first is to have a look at where those invalidation levels are. And this is basically like the final straw. You can almost, well, at this later stage of Bitcoin's history, it's, I dare say, 100% undeniable proof that if it closes under 50% on the monthly, it's most likely going lower. Well, 100% of the time it goes lower, but I don't want to say 100% because anything can change. Just the probabilities are far higher that it's over if it does that. So until that point, then you have to assume that there's still further upside. The trend is still in play. It's still a bull market. even with the scares to the downside, like I pointed out at the beginning of the video, where you get those big euphoric moves up and then pretty big scares with the case of 8 years ago, the forks in Bitcoin, which we know hasn't been any problem, and then China banning Bitcoin and all those sort of narratives that have happened since then. So in terms of the quarters, previous cycle you had 4. That included the COVID dump. The cycle before that, 1, 2, 3, then the final top. Cycle before that, basically 2 of those. So 2, 3, and 4. Could this time be 5? Well, we'll see. I don't think it'll get there and keep going. But yeah, 2 to 4 red quarters, I think, is a pretty reasonable look at the market here. And if this happens now, well, then it's pretty much what it's done every other cycle. Now, one final bonus here that I'll add in is the left and right translated cycle from the lows. The left and right translated cycle refers to, my analysis anyway, the Hurst cycle. You're looking at lows to lows, reference points, lows to lows. If the top comes in on the second half, or the second half of the cycle, I guess, then it is a right translated cycle. And Bitcoin is in a right-hand cycle, right translated cycle, because it has gone past the halfway point of the 4-year cycle. So the 4 years starting from the low to the low, roughly speaking, might come in somewhere around the second half of 2026, maybe early 2027. But for now, this is where it sits, and the movement to the upside is in that right side. So we're definitely in that right side, right translated cycle for now. So Bitcoin has met the criteria to be in a right translated cycle, measuring from the low of the previous cycle to the next low. So basically looking at the timeframes here. Timeframes is a great segue into the next video, which I'll leave for you tomorrow. We're going to look at timeframes on the market sentiment and how much time is left for a potential grind around a low until things head up. Like, subscribe. We've got a new video popping up for you right here from yesterday. Go and check that out. And I'll see you guys back here at the next video. Don't forget the links in the video description for our channel sponsors and, of course, the free crypto and economic report. See you guys real soon.